People think life insurance is a product you buy in case you die. But I worked in a hospital, and what I saw on those floors had nothing to do with death certificates or funeral arrangements. It has everything to do with living. Living with a diagnosis. Living with a disability. Living with debt that arrived the same week your income disappeared. I was a nurse. I held hands with patients the moment everything changed. And I can tell you with absolute certainty, the crisis that destroys most families is not death. It is what happens before it. What nobody tells you about health emergencies. Let me paint you a picture I have seen more times than I can count. A 42-year-old father comes in with chest pain on a Tuesday. By Thursday, he has had a triple bypass. By the following month, he is home, recovering, unable to work, staring at a stack of bills with no paycheck coming in. His wife is working double shifts. His kids are being picked up late from school every single day. The mortgage company does not care that he nearly died. The car payment does not pause because he is in recovery. This is a real financial emergency, and it has nothing to do with dying. Here is the part that most people do not realize. A serious illness does not just cost you in medical bills. It costs you in lost income. It costs your family in childcare, transport, home adjustments, caregiving time, and emotional bandwidth that was being used to keep everything running. The financial impact of surviving a major health event is often worse than the medical bills themselves. And yet, most people have zero protection against it. The actual risk you are carrying right now. Here is a question that does not get asked enough. What is the probability that you will die before 65? Now, what is the probability that you will be unable to work for 3 months or more before 65? The second number is dramatically higher. According to actuarial data, the average working adult has a 1 in 4 chance of experiencing a disabling condition for 90 days or longer before they reach retirement age. 1 in 4. Yet most people spend more time choosing a phone plan than they do thinking about income protection. Life insurance, particularly the kinds that include living benefit riders, is not just a death product anymore. The industry evolved because the risk evolved. People are living through conditions that used to kill them, and surviving without a financial plan in place is its own kind of devastation. When I started working in nursing, I thought the worst outcome for a patient was a bad prognosis. I learned quickly that for many families, a long recovery with no income was far harder to survive than a short battle with a bad ending. Because at least with death, there is a settlement. There is a policy payout. There is something. With a prolonged illness and no coverage, there is nothing but accumulating damage. What life insurance actually covers that people miss. Let me break down what modern life insurance can actually do, because most people are working off a version of this product that is 30 years out of date. The death benefit. Yes, it pays out when you die. Your family gets a lump sum that can replace your income, pay off the mortgage, cover your children's education, and give your spouse time to rebuild without financial pressure. That part most people know. Living benefits. This is where it changes. Many policies today include riders or built-in provisions that allow you to access a portion of your death benefit while you are still alive, if you are diagnosed with a qualifying critical illness, a chronic illness, or a terminal illness. Heart attack, stroke, cancer, kidney failure, ALS. The list varies by policy, but the concept is the same. You do not have to die to benefit from the protection you have been paying for. I have seen patients who had no idea this feature existed. People who were draining retirement accounts and taking on credit card debt during a cancer treatment, when they had a life insurance policy with a living benefit rider sitting in a drawer at home, untouched. Disability income riders. Some policies can be structured to pay a monthly income if you become disabled and cannot work. This is separate from disability insurance, but some life products bundle similar protection into one premium. Cash value accumulation. Certain permanent life insurance policies build cash value over time, like a savings component that grows tax-deferred. You can borrow against it, use it to supplement retirement income, or use it as a financial cushion during a rough year. This is not suitable for everyone, and it is not a replacement for a proper investment strategy. But for some people, it fills a real gap. The point is not that every policy does all of these things. The point is that you cannot make an informed decision about protection when you think life insurance only pays out at a funeral. The conversation families are not having. In nursing, we had a term, anticipatory guidance. It means educating patients about what is coming before it arrives, so they are not blindsided when it does. We did it for new parents. We did it for people managing chronic conditions. We did it before surgeries. We prepared people for what is likely so they can make decisions in advance, rather than in the middle of a crisis. Most families never have this conversation about money. They do not talk about what happens if one income disappears. They do not know what they would do if the breadwinner needed 6 months of rehabilitation. They have never calculated how long they could survive on savings alone. I'm not saying this to scare anyone. I'm saying it because the families I have seen navigate a health crisis with a financial plan are fundamentally different from the families without one. Not in terms of the medical outcome, but in terms of everything around it. The family with a plan can focus on healing. They can keep the kids in the same school. They do not have to sell the house. One parent can step back from work to provide care without the whole household falling apart. The family without a plan is making impossible decisions in the worst moments of their lives. Protection is not purchased at the point of need. It is purchased in advance, when everything is fine, because that is the only time you can actually get it. Why nurses believe in this? I cannot speak for every nurse, but I can speak for what we saw. We saw the other side of fine. We saw what happens after the phone call, after the diagnosis, after the accident, after the sudden shift from a normal Tuesday to a Tuesday that splits a family's life into before and after. We also saw people recover. We saw resilience that was extraordinary, patients who beat statistics, who surprised everyone, who walked out of rooms we did not expect them to leave. But the financial damage does not recover at the same pace as the body. Medical debt is the leading cause of bankruptcy in countries without universal health care. And even in countries with public health systems, the indirect financial costs of illness, lost income, caregiving, home adaptations can be just as devastating. Life insurance, when it is the right policy for the right person, is not a product. It is a buffer between your family and the worst version of an already hard situation. It is a way of saying, whatever happens to me, I did not leave you without options. What you should actually do next. I want to be honest here. I was a nurse who saw too many families unprepared for the financial side of a health crisis, and that is why I am talking about this. So here is what I would actually tell a patient, or a family member, or a friend. Start with the question, not the product. The question is, if I could not work for 6 months, what would happen to my family financially? If the answer makes you uncomfortable, that discomfort is useful. That is the gap you need to address. Then talk to a licensed professional. Someone who asks about your income, your debts, your dependents, your existing coverage, and your specific situation before recommending anything. Understand what you already have. Check your group coverage through work. Understand what it actually covers, what the limits are, and whether it follows you if you leave that job. And then make a decision from a position of knowledge, not fear or avoidance. Here is what I know. Nobody walks into a hospital thinking it will happen to them. Every single patient in every single bed I stood beside thought they had more time to get things sorted. You probably do have more time. Most people do. But the best time to build a financial care plan for your family is when you do not need it yet, because by the time you need it, it is too late to get it. Think about the people depending on you. Think about what protection actually means for them, and then do something about it. If you're new to my channel, please hit that like button and subscribe. Your support is highly appreciated.